and what you may expect in the month of April 2022. And before I go ahead, please go ahead and subscribe to my channel if you still haven't done. Please do like, comment in the section below. And this is a Financial Freedom Talk, a direct episode live on YouTube today on 6th April 2022 and 7th April 2022. And this is an update for my clients, especially to understand how markets are going to be doing and how and what you can expect going forward. Because there is concern, there is worry, there is so much apprehensions about the Ukraine US pressures on their economies and what's happening with the Russian invasion of Ukraine. What can go bigger wrong? How can the markets behave accordingly? And what is the economy? What is the trade? What is the US dollar price? How will the oil prices behave? Well, so many things to keep in mind, but I'll try and make it very simple and very concise so that you and I can understand what we should be doing with our investment. But remember, always have a financial planner advising you on how you plan your goals, investments, what time horizon you have, and have a SEBI registered investment advisor always guiding you on what should be doing with your investments, who should be assisting you with a fiduciary capacity in mind. With that, let me take you to deep dive into what's happening in the Indian economy, world economy, and what's there. Well, very quickly, I'll take you through the points which I've made an assembly of. Well, to begin with, the equity market outlook I will try and see, and I will try and explain how this is going to be affecting you and me and what we need to keep in mind when we're looking at our investments in the short and the long run. Number one thing is the commodity prices are at an all-time high due to the geopolitical risk in the world. What does that mean for us? Well, if there are geopolitical risk with the Ukraine war continuing, what can you be expecting for short and long run? That is going to be impacting because there is going to be higher inflation in India, which is going to be pushing BI, Ministry of Finance, to raise the interest rates, and that will affect, yes, that will have an impact on your investments also. This will result in sharp drop in a lot of bond prices. If you're investing in bonds, you need to take caution there, with a negative yield in debts expected to reduce sharply going forward, and the growth may be expected globally to be going in for a slowdown. Because if I have done an analysis of the global overall growth, so it is going to be you can expect global growth to be expected to be much slower because of the Russian Ukraine war going on, and Europe overall being affected, with the hardest being the European countries. In the effect on the energy prices, going to be seeing a hike, and therefore inflation in the near term is definitely evident. And economic impact of COVID-19, which we're still seeing, has reduced, but can we see new variants coming up? But recovery seen from the various other countries will have an action on the Federal Reserve also, which is putting pressure on the central banks there to raise the policy rates. Well, if I just look at the growth rates and the GDP in India, the GDP, which is 2021 expected figures out, is 8.9, while expected for 2022 financial year going ahead is 7.8. Well, if you compare it with China, which is at 8.1 and 4.8 going forward, well, we are far ahead on that. If we look at US, then the past 5.7% is the GDP growth rate of the last financial year 2021, and expected to be just 3.2% in the financial year 2022, and Japan at 1.9 and 2.6, and European countries expected to be respectively 5.2 and 3.2% as GDP. So can we agree that India is going to be seeing fastest GDP growth rate in the world in 2022, while the world sees an overall GDP growth rate of 3.4%? Well, if that's so, then the US yield curves are going to be seeing inversion, and that's a sign to be cautioned of, because rising oil prices, inflation there, and the bond yields are affecting worldwide all the bond prices also. And equities across the globe are also, of course, correcting, and that is because even the S&P 500 companies are seeing negative uh, EPS guidance ratios and the track rec which we've seen is going to be very expensive. And the Chinese markets, the Chinese internet market cap also is taking a beat. So, with this, is there a demand which we can see on destruction or construction, or is it going to be positive? Commodity prices, of course, are going to be so highest level going forward, and beginning of an end of dollar dominance with euros, yen, sterling, Chinese resemblance coming up, or is the ruble going to be coming back and becoming the dollar dominant or the oil price dominant? How do we look at the Indian economy? Just few points. The GST collections has seen an all-time high of 1.42 lakh crores. Indian merchandise exports have hit a high of $418 billion for the financial year of financial 2022. Indian automobiles, that's the highest record of in the financial year 22, just completed. And India's automobile exports are also set to scale the highest all-time high. So a lot of car demands for that matter. Well, we are inching towards self-reliance and how India sees, we're going to be seeing 35 new drug raw materials that were imported earlier. Are we going to be manufacturing and becoming self-reliant on our own drug raw materials? Housing sales has picked up an all-time high since 2015 in the last quarter gone by, and manufacturing activities have seen a moderate activity in the quarter of Jan, Feb, March, and confidence, of course, for that matter, is at a 2-year low. I would agree on that. Won't you agree with me on that? So, is it good times? Is it the bad times? Is it the worst of the times? Well, we have seen from April 2022 20 till October 21 that all the central banks were easing out, and there were earnings doubling up, and record inflows were happening. While in October 21 till date, we have seen central banks are training guns on inflation as a major concern, and earning upgrades are paused after the Ukraine war in the last 2 months we have seen, as we see in April 2022. And retail participation is also thinning up. So we've also seen some financial institutions selling out. Is India better placed to withstand the external shocks? We need to see on that. While China is now looking at the next version of COVID, India is on a festival mood with just Holi gone by, another April festival starting up. Is our economic activities at all-time high? Well, it is because various business indexes have put India pre and post pandemic levels at a resumption level at one of the highest at $125 billion, and that's the March 22 ending. So can we see a gradual recovery across the various indicators? Yes, we can see a CAGR, compounded annual growth return, of around 9 to 11, 9 to 10%, and exports, power demands, two wheelers, and other GST collections being an indication that things are on a gradual recovery across various indicators. Agriculture growth also seems to be on a moderate to average kind of a return CAGR of 3 to 5% as such on the last quarter. Normal monsoon is expected in 2022. So let's say we will have a normal monsoon rain coming up. Well, these are some indications, and capital expenditure seems to be falling in place also, with government and private new projects being announced. And hence, can we say that investments have picked up in various sectors? And can we say that these are going to be good times, or has the bad times gone out? But with the soaring oil prices, 107, 108, 110, various petrol and diesel prices across the cities in India, is the impact of rising crude on going to be affecting our oil prices also? And is the widening CAD going to be 3% of the GDP with oil at around 100 barrels US dollars? So can that be expected? Because crude record breakdown has been seeing a lackluster demand in the last quarter. Well, the crude oil prices seem to be incentivizing higher production. How does the equity market compare in India? Well, as I could see, the small and mid cap funds have outperformed the large caps in the financial year ending 22, and hence the performance in on as of March 31st, 2022 has been a 1 year which has seen the Nifty index closing at 19%, the mid cap and the small cap at 25 and 29 respectively. So can we say small and mid caps have outperformed the large caps in the last financial year? Yes. We also saw the worst financial institutes selling since 2008 crisis. Why is so? Because now there is going to be retail participation increasing substantially, and financial institution sellings will have an impact going forward. But volatility is low and retail participation is too high. Value of the financial institutions needs to be checked out. But with this, we need to understand that is there stability? While India is outperforming various other countries, China, Russia, and South Africa, amongst the BRICS countries, so can we look forward to a great year going forward in the next year? So can I summarize and say that every correction is an opportunity to increase your allocations, but do consult your financial planner on what seems to be the best as per your investment plans also. Now, if I am doing an overall evaluations, well, they are fairly above the market, I would say, and corporate profitability seems to be a critical factor for a lot of corporates. And net weight to equities in that way, I would say, small caps should see more of flavors. And the concerns would be the geopolitical conditions is what one needs to, of course, Ukraine and Russia, China, China with Taiwan, India with China. So these are, the hostilities one needs to keep a watch of. Inflation will have an impact with the global inflation rates increasing. That will have an evaluation impact on rising rates expected in India and in US, of course. So reducing liquidity can be a concern or a side effect, you can say. And various decisions across the globe can have various impacts on the economies, and thereafter the side effects can come into effect in India also. So keep a lookout for your uh, well, you can always ask me, is gold a safe haven? In the last couple of years we've witnessed that gold has seen an average return of 10% year to year. Well, is it a safe haven during the global turmoil? Yes, it does seem to. When such COVID and Ukraine crisis comes up, gold becomes a safe haven. But when you're looking at long term, do not get swayed by crypto offers and the haste of cryptocurrencies coming up and NFTs, because you need to be closely looking at your financial plan and not what investment opportunities come up so suddenly. Well, liquidity is becoming a big concern going forward because of the record borrowings which have happened in the last uh, due to the pandemic and due to the current situation of Ukraine, Russia. So you will see a lot of borrowing globally, and these are going to be affecting the monthly borrowing patterns. Therefore, you can see that RBI would be closely looking at inflation rate of 4.5 going upwards to 5.5, and therefore higher commodity prices will result in upward revision of inflation also to about 6.5% is what I see. And that steep curve is going to be affecting the short term and the long term development loans, which will affect the RBI action to be taken, and hence the current rates cannot be sustained for long, and that needs to be increased. We have also seen US yield curves becoming inverted, in the last couple of months, and that I would say is a caution for India to be better placed in the real terms, and we need to be looking at this as a concern in the short run, not in the long run. So this is an overall analysis and summary which I could put together. And side effects of the war, of course, continues on commodities, inflation, oil prices, and it'll be tough for the central banks to, support the growth pattern which we can look forward to. And these global situations, of course, they're extremely fragile, and they do affect what decisions are taken care by RBI in interest rates, and therefore the curves are going to be a concern, and indications of strong global growth are not going to be very clear, while recession could be an indication to check around. And RBI has already begun that normalization through their uh, rates check. And I would say it will be extremely difficult for RBI to continue the current rates. And perhaps RBI can prepare for the next quarter, April to June, and prepare a policy accordingly. And that's what we can look forward to. So, investors with a long term horizon can look forward to investing into dynamic bond funds or gilt funds, and relatively checking up on the YTM of the bonds for that matter. Floating rate and medium term funds could also be looked up. Of course, stay ahead with your investments with your financial planner, and consult uh, standard terms and conditions you apply when you're looking for investments for your risk appetite. And accordingly, I would say that this is a time for not making lump sum investments, and to be taking a caution with uh, where you find it expensive or cheap, or keeping it neutral. In that sense, uh, you could look at asset allocator funds or balance advantage funds for that matter. So stay tuned. Uh, Normal terms and conditions. Please read your offer documents carefully. Before I end up, just a summary of the key variables and their impacts on our economy, and therefore the equity markets also. Economy in the short run, well, the economy due to the COVID 19 has impacted our economy, and there is likely to be a sequential impact on the Indian economy as it unlocks after the pandemic has closed. And this particular quarter, you can see higher commodity prices rising. Corporate earnings, again, short to medium term, I would say, have an impact on the near term, and long term indicators continue to be quite healthy for that matters. Financial institution inflows have seen global asset classes, pulling them out, and therefore strong term growth has given favorable um, for them to be pulling out. But on the policy and reform basis, I would say exports have improved, uh, bringing in the momentum which is required. And for that matter, I would say that inflation is going to be expected to be range bound. Therefore, higher oil prices, of course, are around the corner. And as RBI is, looking to check the rupee uh, speculations, and making sure that there are adequate reserves. So that will be something to watch out for. An RBI policy to bring the normalization with the inflation rising, that's a concern. And liquidity for that matter, uh, economic growth will have to be seen for that matter as such. That's all from me on the overall. And before I close, just like to bring out the summary here. And all I can say is stay tuned, look at your financial plan and your investment advice, not just for staying for just a couple of months ahead, but for years and perhaps decades. And that is more important than just looking at these events which are happening. And do not look for the short term signs which indicate turbulence. Look for the long term and accordingly take decisions. And do be in a hurry and haste to consider the war signs to become larger and larger. But of course, you have to be taking precautions, ensuring that your long term goals are online with your investments, and your short term goals have got liquidity for you to be able to pull out money if required as and when. With that, this is a small update I wanted to bring in. And of course, check your risk appetite, your goals, time horizon accordingly while you're taking important decisions. And check out for your exact risk appetite. Of course, always stay invested, stay healthy, stay safe. Be a happy investor, not just a short term investor, but a long term. Thank you very much for this, for staying on with this episode on Financial Freedom Talk with Taresh. This is